So this definition I'll repeat again. It is debit means something coming in the business and credit means something going out of the business. This is the layman definition which is given to students for their simplicity, for their understanding. Whatever the business receives is termed as debit. Whatever the business has to pay is termed as credit. Now, after this, I'll be writing a note. You need to write it down in your journal, and I hope you are copying down everything so far written.
Yes.
The note is that for every debit, there is an equal and opposite. There is an equal and opposite credit. Can you relate this definition to any other definition?
No.
For every action, there is an equal and opposite reaction.
Oh, it's the law.
It's a law.
Physics, yes.
Newton's third law of motion. I've taken
Yes.
definition from there. Okay, I've developed my own, and from there I've developed this, that for every debit there is an equal and opposite credit. So I'll be explaining. Equal means the amount would be equal. The amount would be same.
Okay.
If debit is 3,000, and then credit will be 3,000. Okay. And what do I mean by opposite? Opposite means if debit is on one side, then credit will be on the other side. So that's why I'm saying opposite. So this is the note. This is the rule according to me what I've developed so far with the help of Newton's third law of motion. And this is for every debit there is an equal and opposite credit, and we can reverse the definition too. For every credit there is an equal and opposite debit. Okay, you can write it.
So if you are buying if you receive $4,000 in your bank, then how can you're going to give away?
What is the reason of getting the 4,000? That will be specified in the question.
Maybe it's I don't know, somebody gifted it to us or something.
Okay, let's make this like this, that we receive 4,000 in bank as a loan from J Frank. Okay.
Okay.
So for J Frank, we are receiving 4,000. We agree with this. So far, at this current moment, we are receiving 4,000. Okay. But we don't know about the credit. So once we establish the debit, the opposite is the credit. Okay. Who is paying
what
us?
if it's not loan?
What if it's not loan? So it would be any other thing. It would be a sale, let's suppose.
Okay.
If it is a sale, so goods are going out of your business. You agree with this?
Right.
Whenever goods are going out because of selling them, we call it as sales. Okay. And if goods are going out, it is termed as credit.
Right.
So the other thing which is remaining is the customer, J Frank, which would be debited, because for every debit there is an equal and opposite credit.
Oh, okay.
Okay.
It's like in the journal entries, right?
Yes, we'll solve this. Don't jump over the entries. We'll solve this sequentially. Don't worry. Everything will be there before we proceed.
Okay.
Okay. So you can write this down. I have given this definition I have taught like this to my students for more than 5 to 6 years. And Alhamdulillah, and I can say one thing, that they get the concept at once by this, because they are zero in accounting when they come in my class, and then when they are in 11th, so they are of this thing that whenever I give them this logic of any transaction, they quickly get it. Okay. So there are some terminologies I'll be telling you, some terminologies which are important. There are three things. One is a term which is used as goods. It will be either bought in the transaction, it will be either sold in the transaction, it will be either returned in the transaction. Okay.
Right.
If it is returned by us, so the logic is that anything going out of the business is credit. So the goods are going out of the business. We are sending the goods to the supplier. If we are returning the goods, so it is purchase return. Sir, on which side purchase returns would be? It would be on credit side because the goods are going outside the business. So, sir, what will be the debit? The person to whom we are returning the goods, that will be debit. Okay.
Okay.
But sir, if nothing is mentioned, it is written that we have returned goods to a supplier. So the supplier would be debit. Okay.
Okay.
Returned by us, returned to us, that can be another situation because we are also a business. Maybe some person returned goods to us. So when they are returning goods to us, so goods are coming back to us. So goods are coming inside the business. So it is termed as sales return. And those goods which are coming back, they would be sold earlier. Okay,
So we sold the goods and then they're returning it back to us.
yes, and this is the same case in purchases. We purchase the goods and then we return it because of any problem in them.
Okay.
Okay, so purchase return means that you are returning goods to a supplier. Maybe the goods did not fit your requirement. Maybe the sales return was there because of more quantity. You asked for 10 products and you got 15 for that. So you do not need the 5 extra. So you returned it. Okay. So in both situations, you cannot say that they happen directly because this is a misconception in students' minds. How come the sales is being returned? So the sales would have happened before, then it is returned. Okay, and likewise purchases would have happened before it is returned. Okay, so this situation I hope it is clear to you.
Yes.
This is simple. If goods are sold, so we term it as sales. That's it.
Okay.
If goods are bought, we term it as purchases. Another thing, another misconception in the mind of students. Bought fixtures, bought goods. Can we say both are purchases?
No, because fixtures are our non-current assets. Goods are our purchases.
Yes. This is one logic, that fixtures are non-current assets. Okay. Another logic I'll be giving in the class. See, the goods are bought with an intention to resale. Goods are bought with an intention to resale. Okay. We have an intention to resale. But for fixtures, when we are buying it, do we have the intention to resale?
No, it's for the business.
It's for the business. That is also a biggest difference between both of these, and that's the main reason when we are buying this good with an intention to resale, so we term it as purchases. We do not buy fixtures for the intention of resale. Okay.
So can we say the definition of purchases are goods that are bought with an intention to resale?
Yes, that is the definition.
Okay. Okay.
When I'm teaching you, even I'm surprised that I'm not given a lot of definitions to my own students in school. So I have to write every definition, then give it to my students too.
Okay.
Okay, so purchases are done. You are clear about purchases, and sales
Yes.
are sales. What can be the definition of sales? The definition of sales would be anything in which you deal. Let's suppose you deal in selling laptops. So if you are selling laptops, it will be considered as sales. Okay.
Okay.
Anything about which your operations are. If your operations are regarding laptops, you will sell laptops. You will consider it as sales. Do you have
Okay.
Frankfurt with yourself?
Hmm.
So we can open chapter number 1.
Can you screen share it?
Okay, I am screen sharing it. 1.11. If we go for let's go for one, not 1.11 because it's asking for effects on assets and liabilities. We do not want the effects. We want to go for debit and credit. So let's see chapter number 2. Yes, chapter number 2.10. Let's solve it together for few transactions. Then I'll ask you to solve it further. Bought laptop computer on time. On time means on credit from timeless limited. Okay, on time means on credit. I'll write it over. On time means on.
So you haven't paid them yet.
Yes, we haven't paid them yet. So bought laptop computer. Debit means something coming inside the business. Credit means something going outside the business. So laptop computer, we are buying that. What will be debited?
The laptop computer from yeah,
The laptop computer. And the credit would be automatically the other name.
timeless LTD
Yes, timeless limited.
because they're giving it to us, right?
Yes, the proprietor paid a creditor B bird from his private fund. See, there are two cases. Either the proprietor, that is the owner of the business, invests in the business and pays afterwards. This is one situation. Second situation, the owner is paying directly the expenses of the business. In both the situation, the treatment is same. This is like that you have given your friend the amount to purchase your lunch from the canteen. This is one situation. The second situation is that your friend has purchased, you have purchased your friend's lunch on your own. Is there any difference in both of these?
Yeah.
No, obviously. Why? Because in the end, your friend is getting the lunch. Either she is purchasing with your
Or your
amount,
person.
or you yourself are purchasing. So this is the same case with this. That owner, maybe he could invest first and then pay from the investment the private funds. One thing. Second thing, maybe he could pay directly. Okay. So
Okay.
in this way, the capital is increasing. In this way,
Okay.
the capital is increasing. So capital will be credited. But
But how from his private funds, that's why.
yes, from his private funds means he is giving amount to the business. The proprietor paid a creditor B bird, so B bird would be debited.
Because he's receiving the money and we are giving it from the capital.
Yes.
Okay.
A debtor T Rob pays us by check.
So bank will be debited.
Check means bank. Bank
Yes.
means debited. So because we are receiving the amount, and
T-Rob will be credited.
repart part of loan from iSIMS in cash. Is the cash coming or going out of the business?
Wait, repaid part of loan from as items in cash. So cash is going away from their business
So it will be credit according to the logic.
and items will be credited.
Return the computer to timeless limited.
Can we say sales return credited?
No. The reason is that because it is not bought with an intention to resale.
So then what will we write?
We will write, see, the logic is simple. What is going out of the business?
The computer.
Yes, it would be credited. Whatever is going out of the business, it is credit. And the
Why
remaining
not sales return? Because we bought it before from them, right?
sales return, as I have told you earlier, that sales return can only be done when we are dealing in that particular group. Okay, sir, how come we'll know in this question that we are not dealing or we are dealing in this? Always remember Frank Wood will always write the word goods. Wherever the words goods is in Frank Wood, you will write purchase return or sales return.
And if it's computer, fixtures, furniture, we'll write something else.
Yes, these are non-current assets. If you talk about assets, assets cannot be sales return or purchase return.
Okay.
Okay, so the next is timeless limited on debit side.
Okay.
A debtor P Bell pays us by check. Yes.
Um. So P bank goes up, so
Yes.
debited, and P bell is credited.
Okay. Bought van on time from Tangle Motors.
So van is debited and Tangle Motors is credited.
It's come to 2.11.
Okay.
For
Uh,
trailer for cash.
trailer is debited, cash is credited.
Paid creditor J tough by check.
JDUF is debited and bank is credited.
Paid W smalls loan by cash.
W small is debited and cash is credited.
And I hope the logic is same that whatever is going out of the business is credited.
Right.
Sold trailer for cash.
So cash is debited and trailer is credited.
Yes, very good. Now you got the logic that why we are not writing it as a sale, because it will be written down as sold goods. It's not written sold goods, it's written sold trailer for cash. Bought office equipment on time from Dexter Limited, it will be paid later.
So Dexter Limited is credited.
Okay. And office equipment will be debited.
Right.
A debtor T Walls pays us by cash.
Okay. So debtor T was is credited and cash is debited.
A debtor L Tate pays us by check.
A bank is debited and T was is credited.
Proprietor puts a further amount into the business by check.
So capital it is, right?
Yes, it is capital.
So debited is bank
Yes.
and credited is capital.
Okay. A loan of 650 in cash is received from F Burns.
So F1 is a creditor. He'll
What
be
is
credited.
cash is received first, we'll write that. And F
Okay, and
Burns.
F1 is credited.
Okay, good. Paid a creditor J5 by check, by cash.
Cash is debited. No, wait. For the last one, cash is credited
Yes,
because we paid him.
cash is credited. Very good.
Okay. And J5. Yeah.
So we are done with this situation. Now we have to move down on the effect on ulcer. I'll be telling you the rules first, then we'll move on to the topic of that.
Okay.
Assets are assets and expenses increase and decrease. Credit and credit. Okay, assets and expenses increase on debit side and they decrease on the opposite side, which is the credit side. But if we talk about capital, liabilities, and revenue, capital, liabilities, and revenue, these increase on credit side, these decrease on debit side. They increase on credit side and they decrease on debit side.
Sir, I have a question.
Yes.
How are expenses debited when they increase?
Okay, I'll tell you that with the help of an
Because
example.
more money is going out of the business, right? So shouldn't it be credited if it's increased?
No, it's about nature of that. the rules cannot be questioned. Okay, we cannot question the rule that why it is debited. Rules do not have any logic at all. There is no principle, there is no logic in this that why anything is being debited or credited. Rules means obviously if you, I hope you would have seen the traffic signals. We cannot question that
Right.
why we have to move on green signal only. Why can't we move on red signal? Okay. So
Right.
this way rules are fixed, but still I'll try my level best to give you an example and make you clear on this thing. Okay.
Okay.
Now there is another thing which I'll be writing it over here, which is anything which is anything which is increasing on the side. Let's suppose asset is increasing on this side on debit, so it is the by default nature of asset. Okay, it means
Okay.
that asset is in plus if it is on debit side.
Okay.
This is the by default nature of expenses. These three, these are the by default natures. What do I mean by default nature? It means their balance BD should come. I'm not saying it must come. I'm saying it should come on the same side where they are increasing. Sir, what if they are not coming on that side? Let's suppose bank is an asset. Its balance BD should come on the debit side by default nature. But its balance BD is coming on the credit side. So it's a bank overdraft. So I'll not have a problem with that. But still it's better if the debit balance where it is coming, it should come on that side.
Okay.
Okay. So we'll solve the question and then we'll decide that whether we understand or not.
Okay. So are you screen sharing for the questions?
Yes, I'm doing that. Okay, so we'll move on to exercise 1.10 where we left it. These rules are very much important. The reason is that because these are the reasons how we are solving the transactions. Effect on assets, liabilities, capital. We pay a creditor. Creditor is what is creditor according to Ulster?
Uh, according to Ulcer,
Yes, in Ulster.
Ulcer is assets, liabilities, capital, expenses, and revenues.
But we are paying a creditor. What is creditor? Who's creditor? First define that.
Creditor is how do I say it? Like the person of the company to whom money is owing. Like they are a
Creditor
lender.
creditor is the supplier of the business. Okay, he gives us the amount of, he gives us the goods, we purchase the goods and then we pay him. What happens? We pay creditors after some time. That's the main reason we write accounts payable in the current liabilities. Okay,
Okay.
we majorly purchase on credit from our creditors, from our suppliers. So when we purchase on credit means we'll pay afterwards. So when we pay our creditors, when we have to pay after 1 month, do we have a liability?
Once we pay, then he's not a liability. But before, if you don't pay him yet, then he's like a liability.
No, I'm saying that when you're running a business, don't you think it will be a continuous cycle of this? That once you will pay in 1 month, then again in the next month, again you will have a liability. Then in the third
Right.
month, you will pay that. So this is a continuous cycle which will be there for the whole year. Okay. So if I talk about
Okay.
creditors, if we do not pay creditors on time, So it means we have a liability if we do not pay
Right.
them. So we created the liability by purchasing from creditors on credit. Do you agree with this?
Yes.
Okay. So once we have once we have created the liability by not paying them on time, so when we will pay, what will happen? The liability will increase or decrease?
Decrease once we pay.
Decrease. So this is what is happening in this A part. We pay a creditor 310 by check.
Yes, so liability is decreasing.
So what is the effect of this? What will do? The effect on liabilities. What will do? Where do we record the decrease in liabilities?
How will we record? We'll just write like if it's in like the journal, we'll say the creditor's name is debit and bank is credit.
No, no, no. I'm asking about the rules. According to the rules, if you refer to that, where do we record the liabilities if it is decreasing?
Debit.
Debit. So write it debit.
Okay.
And if we talk about assets, is there any asset in this transaction?
No.
Is it an asset?
Check.
Bank.
Check is bank
Okay. So credit is bank. So asset is bank, and we credit it.
because it's decreasing.
Yes, it's decreasing.
Okay.
Bought fixtures 175 paying by cash. What is fixtures
An asset.
and what is cash?
An asset.
So again, debit and credit both is done with asset.
So cash is the one that's decreasing, but fixtures is increasing.
Yes. Bought goods on time. One is purchases, another is credited. Credit. We bought goods on time means we bought goods on credit. One is purchases.
But sir, how do we know if it's cash or bank? Because it just says the pound 630.
It is saying on time. On time is on credit.
Okay, so liability.
Liability, yes, it's a liability. It will be a liability, so it will be credit. And purchases,
Is debited.
the proprietor introduces another. See, purchases is an expense. It's not an asset. We have not studied so far. But for the simplicity, they have given only 3 columns. So for that, I have written down in the assets. Otherwise, it's an expense.
Okay.
The, pro- the proprietor introduces another 1200 cash into the business. What is this?
Cash. So capital. This is. It's increasing. If it increases, then it's credited.
And another cash is, what is cash in also?
It's decreasing. So if an asset is decreasing, it is credited.
No. The proprietor introduces. We have to see from the
But
perspective
the
of the business.
proprietor's cash will decrease, right?
No, no, no. See, there are two perspectives. One is that the perspective of the owner, and another is the perspective of the business itself. So the business and the owner, they both are separate entities. They both are separate from each other. Okay. What misconception we do have at the start of the account, at the start of accounting, is that the owner and the business both are same. Don't think like this. The owner is introduced cash in the business. Okay, so think from the side of the business.
The cash has increased, so it's debited.
Yes, it will be debited and cash is asset. Jay Walker lends a business 2500 in cash.
So lens is like a loan.
Yes,
So its loan is increasing. So liability is credit.
and cash.
Cash is increasing, so debited.
A debtor pays us 50 in cash. What is this?
So cash is increasing.
So
Debit.
both are assets. Do you agree with this?
Yes. The
So
debtor.
debit and credit both will be done with that debtor and cash.
Wait, why credit?
The reason is that because our account receivable, our customer is decreasing. Now he won't have to pay much in the future.
Oh, okay.
Okay. Once he has paid that, how come I can expect more payment in the future?
Right.
So that's why it's credited and cash is debited. But go for another logic. A debtor pays us 15 cash. So cash is coming, cash debit and debtor credit. That's it. So both are the assets. So I have recorded debit and credit both. We return
Okay.
goods costing 90 to a supplier whose bill we had not paid.
Um, Wait. So we return goods, purchases return
Yes.
to a supplier whose bill we had not paid. So he was before a liability.
Yes. So see, the liabilities are also decreasing
Yes.
and the expenses are also decreasing. First we did purchases. So purchase return is
So the
decreasing.
asset basically purchases is decreasing. So asset decreases is credited.
Yes. And liabilities are also
Also,
decreasing. So it is debit.
so debited.
What an office computer paying 610 by check.
So increasing is debit in asset,
And bank,
and is credit because it's getting low, decreasing.
did you understand this question?
Yes, so
So would it be possible that if you solve 1.12 on your own in the class,
okay.
so you continue with that? I'm there. If you want to ask any questions, you can ask.
Okay. So one question.
Yes.
So bought a van on time, 8,700. Do we write credit in liability?
Yes, we write credit and liability because we have not paid him so far.
Right. And also, do we write cash as well in credited
No, no,
or
no,
no need?
not cash because what a van on time. He has not mentioned anything.
Okay. Done, sir.
You are done?
Yes, sir.
Okay, so can you tell me one by one what you have done?
Okay, so first, for the A1, debit is an asset and credit is a liability.
Okay, good.
For the second one, credit is an asset and debit is a liability.
Debit is the liability
Yes,
and
and
credit is the asset.
credit is asset.
Okay, good.
Then for the third one, purchases is debit and bank is credit.
Okay. For the third one, purchase is asset is debit and bank is credit. Asset is credit and
Yeah.
asset is debit. Okay.
Then fourth one, cash is debited and capital is credited.
Okay. For the fourth one, yes,
Asset debit, capital credit.
yes, good.
And then fifth one, asset has both debit and credit.
Okay. Fifth one, you're saying.
Next one, what's
Okay,
up?
ignore the fifth one. Ignore the E part.
Okay. Um, Next one, debit is asset and credit is liability for the sixth one.
The next is the owner takes out of bought goods on time. Okay, that is purchases asset is debit and like credit is
Credit is
debit.
liability.
Okay, good.
And then next one, credit is asset and debit is capital.
The next one is debit is asset and credit. Okay, good.
And last one, credit is asset and debit is liability.
Yes, good.
Okay.
Any questions so far?
No, sir.
I'll move the screen.
Okay.
So I'll move the screen. We'll learn the accounts concept.
Okay.
We can see the example of this like this, that transactions are started a household machines business putting 25,000 into a bank account, bank debit and capital credit, bought equipment on time from house supplies limited. So you can see on time is on credit. They are doing equipment debit and house supplies limited account credit. Withdrew 150 cash from the bank and placed it in the cash box. So cash account debit and bank account credit, because from bank it is taking out the amount. Then we have bought a van
Right.
6800 paid by internet transfer. Internet transfer from bank account means the bank account and van account, van debit and bank credit. Sold some equipment that was not needed at cost of 1100 on time to Zeros debit and equipment credit. Returned some of the equipment
Hmm.
costing 2300 to house supplies. House supplies account will be debited and equipment account will be credited. Zeros pays the amount owing of 1100 by check. So Zero's credit and bank debit. Pay another van for 4300 paying by check. So van is coming debit and bank is credit. Paid 9700 to house supplies by internet transfer from the bank account. House supplies debit and bank account credit. I hope there will be
Right.
no questions so far. Everything will be clear until now.
Yes, sir. Everything's clear.
2.12 will start, but before that, I can give you the T accounts introduction, which is necessary.
Okay.
If we talk about a T account, I told you the recording is done by double entry system when I was giving you the definition of accounting.
Hmm.
Double entry system itself says double means there are two aspects of a transaction. If you have given a gift to your friend, so your friend would have received the gift. These are the two perspectives. If you observe from your friend's perspective, he or she has received that. But if you observe from your perspective, you have given that. So there are two perspectives of every transaction of everything. So it is called double entry system. We do double entry system according to T accounts. Do you have any idea what is T account?
Yes, so the left side is debit and the right side is credit in the accounts.
Okay. So the left side is debited and the right side is credited. So we can write this down that why it is called a T account. The T account is called a T account because it's in a T shape. That is the
It's
meaning.
a shape of the.
Like we said T-shirt. So the shape of that is almost like T. Okay. So this is a T account.
Yeah.
The name of the T account should be here. Name of the account. We should put dollar sign. Always remember one thing, whatever signs are given in the question, whatever signs, we will only follow the dollar signs. Okay.
Okay.
So we'll write the year, which can be assumed to be 2019, let's suppose. So 2019 would be there. Okay, so now you can solve the question. This is termed as the debit side. This is termed as the credit side. This is debit side, this is credit side. It is also called the left hand side. And sometimes some teachers say in the class that the left hand side is the debit side and the right hand side is the credit side. The left hand side is the
Okay.
debit side and the right hand side is the credit side in every other T account. In every other T account. Okay.
Okay.
So let's do question number 2.12. July 1st, the transaction is started business putting 15,000 of his own money into a business bank account. What should be debited? What should be credited?
So I can't see the screen.
You can't see because the reason is that I have to shift the screen. I'll be solving it on this whiteboard. Okay, so I have to shift again and again.
Okay. Started business by putting 15,000 of his own money into the business bank account.
Yes.
So in this way, capital is credited.
Okay. And another account.
Um, bank is debited.
So we'll make the account of bank and capital. This is the T account of bank. Because bank T account should be a longer T account because there are a lot of transactions which are done by banks. So always remember, I used to make mistakes as a student a lot. So always remember, bank account should be a longer account, and capital can be a shorter account because capital may be maximum of two transactions will be there in the question. So the year is
So
not
in the
mentioned.
capital account, bank will be credited, and in the bank account, capital will be debited.
Yes, there is no year mentioned to this question in Frankfurt. So I'll assume it is 2019. In your past paper questions, it will not happen. This is the title of the account. Capital, you said capital will be credited. So the credit side is the right hand side. So we go for this July 1st. July 1st. We'll write bank. Sir, why
Bank.
we are writing bank over here? Because we need to cross refer. When an
Yeah, yeah.
accountant will observe this, the accountant will say that if capital is credited, why it is being credited? So we'll give the reason because of bank. So the amount is 15,000. Now again you said that bank will be debited because there are dual aspects. There are two aspects of a transaction. So capital credit, so it means bank debit. So bank will be debited 2019. This is the presentation of the accounts, which is very much important. So if I go for here
Capital you'll write in the debit side.
in the debit side, but why it is being debited? Because of capital.
Hmm.
The amount is 15,000. Okay. So is it easy for you?
Yes.
So can you solve this question?
Okay.
Okay. You solve this question. We'll see how many transactions you can do in the class. I'll see and we'll verbally tally with you. and in the next class I'll see this question in a handwritten form. Okay, so you will share the screen in the next class and we'll discuss this question at the start of the class, your T accounts.
Okay, so I will start it right now and then we
Okay.
can
Yes, I'll
continue.
at the end of the class I'll ask you how much have you done. Okay.
Okay. So, do you mind if you could screen share the question?
Okay, I'm doing it.
Thank you.
Varsha, how many transactions have you done?
I'm on the fifth one.
You're on the fifth one. So it is the 5th of July. You are on that.
Yes.
Okay. So I would suggest it would be better if you solve the question on your own on the piece of paper and take the what I can say, take the snapshot of that picture and share it with me in the next class. Okay. So we'll discuss it
Okay.
first, then we'll proceed with the class.
Okay.
Okay. So shall we call it off today?
Okay, sir.
Okay. So see you in the next class. Goodbye.
Okay. Bye.